Ladies and gentlemen, we are going to talk about AMC stock, but earnings are coming out. Amazon is completely clapped down over 11% right now. Earnings just came out. They did guide lower. It's going to all come down to Apple. If Apple earnings are bad as well, something similar to Amazon, this is not going to be a good story. The main part of Amazon's business that everybody has been looking forward to, AWS, they guided down for that as well. So it looks like we got Amazon and they are a goner. Apple is down about 0.5% here in after hours, but they have not reported yet, and they are going to be the main key. Things are getting very volatile. The S&P is down 0.5% here in after hours. So ladies and gentlemen, welcome to the Super Bowl of finance for the stock market in 2022. This is going to pave the way of what are we going to see? What do we expect throughout the next coming weeks, at least until the Fed meeting. So we got a lot to discuss here in this video. We're gonna wait, hopefully we get Apple earnings throughout this video, but Amazon is definitely a goner. So it looks like we could see more downside here, but Apple could theoretically save the day. So we got a lot to talk about, ladies and gentlemen. Let's dive into this video. AMC stock was down 1.32% on the day, down 0.90% here in after hours. This is obviously coming off of the back of Amazon earnings, and it does not look good for Amazon right now. A 10% drop on Amazon is just wild, and it is affecting Apple in a major way as well. But what happened to AMC stock today? Well, like I said in the last video, you've seen AMC was holding a lot of strength, whereas the markets were really weak, and it's totally flip-flop today. The markets are very strong. AMC was very weak. Now, we did bounce off of $15 per share, so we did not flush under that, and that is a good sign. We hit $14.70, and then we did see a sharp reversal from those lows. So depending if earnings are good for Apple, if Amazon can somehow bring this back, then you will see, in my opinion, a bullish reaction for the overall markets. Now, what happened today, GDP did come out. US GDP fell at a 1.4% pace to start the year as pandemic recovery takes a hit. Now, we were expecting to see a 1% gain. That's crazy. The data is showing that it looks like a recession is coming. Now, on the flip side of that, why did the markets not sell off today on that? Well, due to the simple fact of Facebook earnings. They were terrible. Facebook had 300 million less monthly active users, 100 million less daily active users. So it was terrible. They missed on revenue. They guided down lower, all of that. Just not good across the board. But it was not as bad as it could have been, right? And the stock was pricing in a lot of pain, heading into earnings. So that's what happened here. And yeah, Apple is just going crazy. And Amazon is coming up just a little bit, but clap. They've lost about $300 per share as of right now. But throughout the day today, Amazon was up 4.65% to close the day. Apple was up 4.5% to close the day. So it was very bullish. Something like, I mean, Hood's getting destroyed too. Shout out to Robinhood, down 5.5%. Facebook was also up 17.5%. PayPal was up 12%. So there was a lot of things that were obviously working for the markets. The largest stocks were up dramatically. So it's also no surprise in that aspect that AMC was down slightly today, just because of that simple fact of it was only a couple stocks really that was propelling the markets. If those stocks were to sell off, the Apple, Amazon, Facebook, right? If those stocks sold off throughout today, then the broad market would have. So it was a huge tailwind, to AMC and to the overall broad markets. Now, Amazon, that's definitely a goner, down almost 9%. Apple takes a little bit of time to come out, so it might come out at 4:15 or 4:30, and we might have a video later on today to go over that, because that's really gonna dictate the market. Still down 0.5% here in after hours as of right now. Now, if Apple earnings are good, somehow Amazon can find a way to come back to life, then I would expect AMC to see a major rally as well heading into the Fed meeting. That's going to be the next biggest catalyst. You guys can hear the Discord going crazy. If you guys want to be a part of all that action, check that out. Link down below in the pinned comment. But we do get the next Fed decision May 4th, 5 days, 23 hours, 48 minutes from now, May 4th at 2 p.m. So if the Fed comes out and they raise rates by 0.5%, the markets might react negatively to that. Fed Dahlia came out last week and said that we should probably raise them 0.5%, and she's seen as more of a dovish member to the Fed. And the fact that she said that, you know, it is not a good sign, and it's showing the Fed is getting very, very aggressive here. So I don't know if it's fully priced in. The markets, it statistically 97.1% chance of getting a 0.5% rate hike. It looks like it's priced in, and the next 3 meetings are priced in to get a 0.5%. But I'm not quite sure once that reaction comes out if you will ultimately see the stock market sell off or not. Now, the main key, Amazon, it looks like that thing is a goner, down almost 10% right now. Apple is still not reported, but down 0.61% as of right now. If we sell off into the next Fed meeting, we could see the same thing that happened the last Fed meeting. We sold off into that. We were hanging out at the lows, about 414 on the SPY. The number came out. The Fed raised rates by 0.25%. Stock market had hit a historical rally, right? That was the March 14th, 15th rally all the way up until March 29th. Markets have come back down. If we do see Apple and Amazon have bad earnings, or I should say Apple at this point, Amazon's were already really bad, and the stock market does come down to 410 or 400, then you get the Fed meeting, you're likely to bounce. Now, if Apple earnings are good and can save the day and the stock market goes up, then you're likely to sell off into the Fed. So there's really 2 ways to coin this, and I think that's really the only way that it can play out at this point. But it does look like it's going to be a brutal day tomorrow unless Apple really does save the markets here. I'm not convinced that is going to happen. If you guys want my bearish thesis on Apple, go check out the last video that came out at about 2 p.m. today. And Apple is selling down a little bit more. Amazon just over 10%. That is absolutely terrible. So that's that. As far as AMC specifically, you're looking at 18.89% short interest of free float. Cost to borrow max of 2.73%. Current shares that are sold short of 97.39 million. Utilization of 100% and days to cover sitting at 2.48. The option activity for the day, 17 orders totaling 2.87 million, positive order value of 20%. A lot of artificial shorting activity happening here today due to the option activity. Overall, conditions are primed to see the MOAS. Wait for the video that is coming out today, 5:30 p.m. Eastern Standard Time. That's going to be very important because I go over an example, specifically Beyond Meat, that's just seen a major rally off of very little news. And it goes to show the liquidity levels that we are seeing right now are primed to see these kind of short squeezes. And just Amazon is absolutely just drilling right now. So nonetheless, that's basically what you guys need to know. Depending on Apple earnings, that's going to really set the trajectory here. Apple is a bigger company than Amazon, and they do control much more of the market weighting than Amazon, about 7% of the S&P. So if Apple is good, it could save the day or at least mute out Amazon's really bad earnings. If Apple's bad as well, get ready, ladies and gentlemen. So that is the main key to point out here. That's really what you guys need to know. Not too much else to actually add on top of that. We don't have Apple numbers, so I can't fully say right now where we are heading. But that's what you guys need to know. Both those companies are bad. Things are not going to be looking so good. Now, as far as AMC, watch that key level at 15. If Apple earnings are bad, and I keep saying this, I know it's sounding very annoying at this point, but it's the most important thing. If those are bad, then you're probably coming back down to 15, and I will want to see if we can hold that 15 level. If we just get a flash crash, then we might not hold 15. We might have to retest 12 or 13. But like I said, liquidity conditions are primed to see the MOAS, and that is the most important thing. You want to be a holder of AMC heading into the MOAS. So that is basically that. If we do get a bullish reaction from Apple, then watch that 50-day moving average at $18.37 per share, and then the 100-day moving average up here at $20.36 per share. Those are going to be the important levels to the upside. It could go either way. Let me know what you guys traded, how you guys are positioned for these earnings. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. We will be live again tonight, 10 p.m. to 11 p.m. Eastern Standard Time. Make sure you guys come join us on that. We were not able to do that last night because my daughter was just going absolutely crazy, would not sleep, would not let me. So that's the reason for that. Thank you guys for tuning in. I will see you guys in the next one.